In this video, Jim Cramer focuses on helping investors navigate the stock market after a volatile week, driven largely by positive developments in technology, particularly from Microsoft and Nvidia regarding AI advancements. He highlights the importance of upcoming non-farm payroll report this Friday for insights into wage growth and employment levels, as well as other economic indicators like the Purchasing Manager Index.
Most salient driver of this move, an astonishing blog post by a fellow by the name of Brad Smith, totally bankable, delightful too. He's vice chair and president of Microsoft. He was talking about how bright the tech future is and how his company's going to invest $80 billion on AI data centers this year. That's in pretty much anything related to AI roaring, from electricity and power plants and semiconductors, especially, of course, Nvidia, the beating heart of the data center that looked like it was having a coronary just a week ago. Yes, here I am. This is called the pocket. Now, man, with that in mind, what's the game plan for next week? This one's extremely consequential because on Friday, we get the non-farm payroll report. Now, the market's been roiled by a fractious 10-year Treasury bond that won't come down. Just won't come down. Friday's employment numbers need to show lower wage growth and disappointing hiring. Now, that could bring down the yield in the 10-year and therefore make people feel like that the Fed will be back on schedule to start cutting the rates again. We got to get them back into that groove, you know? On the other hand, if hiring and wages remain hot, well, then anything good that happens next week could be repealed. The labor report's that important because other than autos, housing, and materials, I fear the economy may be too hot to give us what we need to push interest rates lower. Now, what parts of the economy are actually driving things? Well, one of them is the Purchasing Managers Index. Yes, we're getting some incredibly strong readouts in these various purchasing manager reports, like the manufacturing one we got this very morning. On Monday morning, we get the PMI Composite Index, which gives us a great look at the economy. And any bull might be perturbed by still one more hot number. Tech was strong all day today. You know, it's the leader again, in part thanks to the buzz around Nvidia CEO Jensen Huang's speech at CES on Monday night, Vegas. Right now, as I've stressed in my morning meeting show for CNBC Investing Club members, 1020 by the way, I think we could be dazzled by the use cases for Nvidia's latest chips, especially the video component. Any company that buys the platform of GPUs and software can make a fortune from it. That's important because we keep hearing that Amazon wants to compete head-to-head with NVIDIA. Something, by the way, I don't even believe. Customers want cheaper chips. Amazon's trying to make them. That said, if Jensen can give his customers a 4 times return on investment, that's what he's going to talk about, and show us how that on Monday night, actual cases of how that can be accomplished. I doubt Amazon or anyone else could compete with that, and maybe NVIDIA actually goes to a new all-time high. Now, we get a job openings things on Tuesday. It's called the JOLTS. You know what? It might give us some clues about Friday's employment number. I've been mulling over these job openings numbers, and I keep thinking about how President-elect Trump might reverse the high levels of immigration we've seen under the Biden administration. But if you deport a huge group of people and you close the border tight, as Trump says he wants to, then you have to pray that we hear a lot about robots at CES, because we simply don't have enough people in this country to do mass deportations without jacking up wages. Robots may be our only hope. Wednesday, ooh, interesting. We've got some very meaningful earnings reports. I'm going to start with Albertsons. Yes, this gigantic grocery store chain was trying to merge with Kroger to create a powerhouse just so it could compete actually with Amazon, Costco, and Walmart. But the deal was blocked, and I think that might have really hurt Albertsons in the interim. I want to hear if there's still a lot of food inflation to come. I also want to know if they've seen any decline in the consumption of salty snacks and cookies and candy alongside the rise of the GLP-1 drugs. Cornell Business School just put out this really amazing study. It shows a meaningful decline in the consumption of these categories, which is exactly what you'd expect. I'll follow up on this study later in the show, but anything that reduced consumption by double digits in some categories is going to actually hurt Albertsons' profitability, along with that of the processed food companies. Then after the close, we hear from an outfit that you may not know, but I follow pretty close. It's called Jefferies. It's a Jefferies Financial Group. This stock's been a total winner. Get this. It ran from 39 and change at this time last year to $81 today. That is stellar. I think the change at the FTC, where a chief who's ideologically opposed to big business is about to be replaced by someone with a more traditional approach, will mean many more takeovers. And that means very big earnings per share for Jefferies, which consults on these deals. I want to hear about their outlook for 2025, as it will certainly infuse mine. Now, what was the Fed thinking when it talked about taking the rate cutting more slowly than we thought after that last meeting? Maybe we'll find out when we get the minutes of that meeting at 2 p.m. on Wednesday. Thursday, well, the market is closed for the funeral of Jimmy Carter, in keeping with tradition following the death of a president. There's not a lot of corporate news of any consequence, but a recently minted IPO, Service Titan, which is software as a service company to help tradespeople, is going to report. And I think it's going to give us a great quarter, maybe one that is so good that it will worth be buying ahead of. Besides the favorable Friday employment number, we've got a few important quarters. Now, first, there's Constellation Brands. This is the STZ kind. It's a bedraggled liquor stock we own from my charitable trust that's been up and now mostly down. It's a bit like a bit of a Job stock. Right now, alcohol is under siege by everyone from the Surgeon General this morning for a link to cancer, to the GLP-1 drugs, which blunt the craving, in the case of Constellation, potential tariffs on its Mexican beers, Modelo and Corona, plus an endangered population of drinkers of some significance, the Hispanic immigration cohort that could be hassled or deported by the authorities under Trump. Hey, I know that's a heck of a list of negatives. I'm not even talking about the healthier lifestyle that younger people are embracing, or the cannabis competition. So why own this darn thing? Simple. Constellation's spews cash. It's growing, and maybe the president-elect could exempt imported beer from tariffs. It doesn't deserve to be punished like this, which is why we actually bought some for the trust last week. But sometimes you have to take a lot of punishment to make some money. On the conf call, we want to hear about this gigantic brewery that they're building in Mexico. It's almost ready, and the costs for building it are behind them. That could lead to a voracious buyback, much bigger than the one they currently have. I know it's a dicey one. Now, I don't feel good about it, but what can I tell you? Sometimes you just don't feel good before you make money. Delta reports, too. I think it'll be stellar. The airlines are a changed breed. They're no longer building up capacity to meet prospective demand. Instead, they're doing their best to keep capacity tight and prevent ruinous price wars. It's still the right time to own Delta because air traffic remains robust and profits are flowing like never before. Finally, there's Walgreens Boots Alliance. That's the ailing drugstore chain. It needs to do something, anything, to reverse its fortunes. Now, I believe, and I have tremendous faith in CEO Tim Wentworth. I don't think he's sitting idly. I think he's working on a change, and he might even have buyers lined up for some parts of the company, and maybe not all. I would not bet against this man, but it's still pretty hard to bet on Walgreens. So here's the bottom line. It's a light week, but still impactful, except that people will be on edge ahead of Friday's employment report. Still, I think you should do some buying if the market gets hammered. As we saw today, it's not nearly as bad out there as so many think.